So we have to get the second part of the PV chart. So this chart is based on high CS ratio. So we have already computed this. So the second table we have to compute for the sake of the graph. Okay. So first we are going to have fixed cost. Then we are going to sell the product with the highest CS ratio. So it's product right. So first we'll sell this product. So when we sell, we'll first put like what is the revenue, and then we'll put what is the contribution for that product. So the revenue for the product, I think we have to copy it from the earlier numbers. We'll just like paste it here. So we'll start. So the revenue is, we have cut already 3 zeros. So we'll do the same thing here. So it will be 2,200. Then we'll take the contribution. So this is the contribution here. So let's get the cumulative of it. The cumulative is this number, the previous number, plus this one. So let's get the cumulative. So cumulative and the total sales will be the same. So we got the cumulative revenue and cumulative profit. So let's draw the chart. We'll take another color. So we'll start here. So the first number would be the revenue. Okay, so the revenue or sales. So if you want, you can also take it as sales. So when sales is 0, the fixed cost, okay, I think we have missed fixed cost. Fixed cost is 500. So it is minus 500. Okay, we have to put the fixed cost here. So fixed cost is 500. So at 0 sales, the fixed cost is 500. So the starting point is same. Now, what's the next point? What's the ending point for this line? The line from here, it moves on to a sales of 2,200. 2,200. So 2,200 should be somewhere here. Okay. And it makes a profit of 700. So 700 should be here. So we'll make the origin point correct. So this is for product C, right? This is for product C. So next we have to do it for product S. So next product S is being sold. Product S is sold at the ending point is at 5720 of sale. So the connecting point would be here. The starting point is here. The ending point is 5720 of sale. So that is roughly 6,000. So it would be somewhere in the middle of these 2 points, right? Because see the difference between here and here, it is 2,500. So this should be 6,250 and then 7,500. So the difference is like 1,250. So it should be somewhere here. Okay. So next, what was the sale? Okay, sorry, what was the profit? The profit is 2,000. It's roughly 2,000. So 2,000 profit is in this line. Okay, it is this point. So a 2,000 profit and the sales is 5,700. Okay, so you can a little bit extend if you want. That's it. And the last one is, so this is product. This is product yes. And the last one is product D. Product D, the total is 2,660 of profit. So that is this point. And also the total sales is 8,840. So that is this point. So the first line and the last line are like points are almost the same. So we have got the line. So the ending is product D. So you can see here, what's the difference between the first line and the second line? Okay, between the orange where this is a constant mix. Okay, this is the constant mix. That is, they are sold in a proportion. And here we are selling the first highest PV ratio, then the lowest one, then the lowest one. So usually the product which has the highest CS ratio will be very steep. The product which has a little bit lower CS ratio, it will be a little bit flatter. And the last one, okay, and the last product has like lower profit of CS ratio, so it will be like much more lower. Okay, so why is a constant mix in a straight line? Because it is sold in a constant proportion. Okay, so at any point of time, the product sold here in the constant mix would be in this proportion, 20 is to 22 is to 26, or in a simple way, 10 into 11 is to 13. So they sell in this proportion only. So why do we have this concept? This concept helps us to tell that when we like sell a product which is of higher profitability, okay, we incur a faster break-even point. Okay, so if you see, the break-even sales would actually be somewhere like quite less. Okay, see, if you could see here, the break-even sales has been like 1,875. If you use this one, the break-even would be like much more lower. So let's see the constant mix. What was the break-even point? 1,800. Okay, 1,800. Okay, I think this is 1,250. We draw so many lines, we don't know what is the number. That's 1,250. So you could see here, the BEP sales is almost 1,000 units. 1,000. If okay, the break-even is occurring sooner. Normally it occurs at a lower point. Now it occurs sooner itself at 1,000 units. Okay, so not 1,000 units, 1,000 of sales. Okay, sales dollars. So this is an important point. So when you sell a higher CS ratio product, it will break even soon than a product which is having a lower break even point. Okay, which has a lower CS ratio, whether it's weighted average CS ratio or individual CS ratio, it will break lower if it has a lower CS ratio. okay, or a PV ratio. So that's about this concept and this sum. We have ended this sum here. So we'll move on to the next problem. So the next problem is also similar to this. The only difference is the question. Okay, the question is the only difference. So the question is, calculate weighted average contribution per unit and then BEP units. Okay, so in the last sum we first found out BEP amount. So that's what we did in the last sum. If you look at here, see, we found out break-even sales revenue, okay, amount we found. Here he wants us to find out the units first, then the I think then he wants us to find out the volume. So how do we find it? So the formula is like very simple. If you want to find weighted average contribution per unit, you have to get total contribution by total sales. Okay, so we'll start from here. We have already done this table earlier, so we can copy that table. So the number that we want is this one, weighted average contribution per unit. So we need total contribution. So we'll put it here. So we need total contribution, which is 31660000 divided by total sales 8840000 into 100. So let's get the answer. So this is the break-even units. So we got the break-even units. Now he wants us to find out the break-even volume. Okay, what's the break-even sales volume? So yes, he wants us to find out break-even sales revenue. So we'll find it out. So get the fixed cost. Fixed cost here is 6,40,000 divided by 35.75. Okay, so this is the break-even sales units. Okay, so sorry, we can't say this as, this is dollars per unit, and this is unit. So we have this as the units, right? If you want to find out what is the individually the break-even units, okay, individually what is the break-even units, then we have to find out. See, this is sold in terms of proportion. What's the proportion? 20,000, 22 and 26 is, it is sold in that proportion. So we have to get the total. So total is 68,000. So this number, we want the proportion for 20,000 units and the total is 68,000 units. So why are we doing this? We want to find out what's the individual break-even point. Okay, that's why we are finding out this. So these are the individual break-even units. And can we find out the sales amount? Okay, the sales BEP or BEP sales. See, now we can find it out. See, earlier we found out in a different manner. What we did was we found out weighted average CS ratio. Then we divided the fixed cost by weighted average CS ratio, and we got our sales break-even sales amount. But now we are asked to find out first the units, okay, of break-even, and then the amount. So to find out the amount, it's like quite simple from here. So we just have to multiply with the selling price of each of this product. So the selling price is this. So this is a selling price. We'll multiply both. Okay, and now we will get the break-even amount or sales revenue. Both are same only. So we got our break-even sales revenue. So this number and the previous answer number should be same. It is 2327260. Let's check. Okay, here we have a different break-even sales revenue. So let's check where we have gone wrong, or any multiplication is mistake or something. Just wait. Okay, sorry, we would multiply it by total sales amount. We should have divided by say total sales units. It is 68,000. So we have done a little bit wrong thing. Okay, so this is the number. So it is 4647. Okay, we should not put 100. 100 is not in the formula, so it is weighted average contribution per unit is 46. Okay, I think we got our break-even point correctly. 1790360. So 1790360. See, we won't get it fully because the decimal numbers are there. So these decimal numbers will cause some kind of a confusion. So that's why we are getting a different answer. So if you want, we will remove the decimals. So if we remove decimals, I think we get the answer. The answer is 1790192. 1790192. It's like 2000 difference. Again, it's some small rounding of here and there. So what we have did, we will just summarize. So we are trying to first find out weighted average contribution per unit. So take the total contribution divided by total sales units you have to divide. Okay, you will get weighted average contribution per unit, that is this number. You have to divide then the fixed cost divided by weighted average contribution per unit. You will get the total break-even point units you will get. This is being sold in a proportion. The proportion is 20 is to 22 is to 26. So if you take the total amount and we divide it in proportion, okay, take total sales units, okay, take total sales units and then use that number to find out the individual break-even units. Then you multiply the selling price, you will arrive at the break-even sales amount. Okay, so that's about this problem. We'll move on to the next one. These are like little bit quite complex problems. Okay, so ensure that you understand this because like it might be useful in places where you are required to work out a weighted average break-even point. Okay, so we'll move on to the next problem. So this problem was asked in December 2020 in ACCA exam. So we'll go through this problem and it is a lengthier problem. We have like several questions here. We have 1, 2, 3, 4 and 5. It has around some 5 questions. So we'll solve one by one. We have to read the question properly. Then only we could answer this. So we'll start. So I think we'll start from the questions first. I think then we'll get an idea. So calculate both the number of customers Health Nut needs to break even and the margin of safety as a percentage for the month of June. So he's asking what is the BEP in units. Okay, that's the first question. And then he's asking MOS as a percentage. Okay, MOS he wants in percentage. And both he wants just for 1 month. Okay, he doesn't want for a year. He just wants 1 month, which is June month. And he wants us to find out both for these items. He wants us to find out for the gym and for the cafe. Both he wants us to find. Okay, so these are the headings and thereafter we'll move. Explain what each of your calculation tells about the performance of gym and cafe. So it just requires an explanation of about calculation. So thereafter C is calculate the budgeted total weighted average contribution sales ratio. So he's asking for weighted average sales contribution sales ratio. Okay, so that we have to find. And budgeted profit per month for Health Nuts if it closes cafe and opens Screech. Okay, it's open Screech. Then advise Health Nuts considering both financial and non-financial factors whether it should replace the cafe with the Screech and whether the calculation in part C provides enough information to make such a decision. Okay, so they're asking for enough information They're asking for whether the information is enough, and they're asking an explanation. Okay, an explanation of the above calculations. Okay, so we have a long range of calculations. So one by one, I think we could work it out. We'll start from the BEP units and stuff, and formulas as and when required we'll do it. So we'll start from here. So you can just read it as along with the cursor. So this is about the general information. So it is a pay as you go facility. You can use it, and you can pay it and use it, and it has a capacity of 200 users and 100 car parking, and it's available only for gym users, and they also have a cafe. Okay, so cafe and the cafe and the car parking facility is only available for the gym customers, and they also give a clean towel, and they also give, the time is from 7 a.m. to 9 p.m. Okay, so these are the information here. What we want is BEP in units we want for the month of June. So BEP formula is, as you guys know by now, it's uh, fixed cost divided by contribution per unit. We have to get that number. So we need fixed cost and we need contribution per unit. Let's see. And to get contribution per unit, right, in order to get that, we should have worked out we need to have these information. So the customers have to pay 8.4 for the access to the gym for 1 hour. So for if they pay 8.4, they'll get one. I think they'll get one towel, and they can use unlimited time in the cafe. So the selling price is $8.4, and if customers want to use the car park, they have to pay an additional one per visit, and 80% of the customers use the car park. Okay, and Health Nuts has been monitoring the number of customers. So he tells how many people are coming there, okay, and they are using. So we'll just wait. If required, we'll use that information. If not, we don't need to use it. Okay. So if you see the excluding the cafe, the variable cost and fixed cost are like this. So we are doing for the gym alone. Okay, we are doing it for all these things for gym alone. So this is how in real life you will get some problems. So you have to work out slowly only. So it's 1.2 of variable cost. So the contribution will be 7.2. Okay, so we got the contribution number, and let's see. See, he has not told like how many hours they use. Okay, it's normally like 1 hour, so we'll assume that we have to assume customers use only 1 hour. Okay, so each customer is using only 1 hour, like that, because then only like one towel would be like given, because like even if they use for 2 hours, still one towel only is given. Okay, but we are assuming that it's going to be just 1 hour. So on average, half of the customers also use the cafe in June. So we'll also work out these for the cafe. So customers are spending 2.2, so that's the income for the company. So of this amount, okay, 60% relates to drink, and the balance remains to the for food items. Okay, and the fixed cost, he says, it is 3,600, and the fixed cost for this for gym was 48,000. So done. So we have two products here. Okay, we have two products, and the two products are drink and food, right? So he says of this 2.2, what we want now is the variable cost. Of this 2.2, 60% is for drinks. 60% people are drinking, and this gives a margin of 60%. Okay, that means the variable cost should be 40%. Should be 40%. Okay, the same thing we'll do for food. So 40% of the amount is spent for the food item, and food items have a margin of 40%. So we'll find out what's the variable cost. The variable cost should be 60. Okay, we'll solve both. We'll try to solve both, and both of this put together is the variable cost. So the total is 1.056. So 1.056 is the contribution, sorry, is the variable cost. Okay, so from here we'll deduct this. So if we got our contribution per unit. So the specific fixed costs associated with running the cafe are 3,600. I think that we have done. So what do we want? We want BEP units. Okay, so we want BEP units. We know what's the formula. Okay, so fixed cost divided by contribution per unit, which is 7.2. So we'll get the answer. Okay, so gym needs this much of customers to break even. So we can put it as customers to break even, and they wanted to find out for cafe what would be the break even. So it would be 3,600 divided by contribution per unit, which is 1.144. So they need at least this many customers to break even. Okay, so we'll just check whether we have done all the items. So it says customer pays 8.4, for 1 hour of gym. And if customers want to use the car parking, they have to pay $1 per visit, and 80% of the customers use the car park. So see, this is also seems to be a revenue, okay, for the gym. So we can take that also as a revenue. And so we'll also take car parking, which is which is an income, that also we'll take. So the car parking is also an income. So car parking is how much they pay. They pay $1, and 80% of the customers who are coming are using or will pay that. So 80% of customers will use it, and they'll pay $1. So put together it comes to 0.8. So the total, so this would be, so this would be the gym entry, and both put together it comes to 9.2. So so 8 is the contribution per unit. So we'll now amend it. Okay, so we have 6,000 customers we need to break even, and for cafe we need 3,146 customers to break even. Okay, so we got that. And let's get to the second part of the question. The second part of the question is the MOS in percentage. Okay, so MOS in percentage he wants. So let's first write the formulas for MOS. So MOS as a percentage, if you want, it would be MOS sales divided by total sales, and that would be into 100. If you do this, you will get the MOS sales in percentage, and to find out MOS sales, okay, because MOS can be found out in two ways. One is that you can find it out through units and through amount. So if you want to find out MOS in amount or sales, okay, the denominator should be CS ratio. So here we have weighted average CS ratio only we should use. Okay, we have to find out weighted average. Why we have to find out weighted average is that because only if you find out, because there are like two products here, one is the cafe and the other one is the gym. Okay, so you have to find out these numbers. So first we have to find out the profit for that entire company, and also the weighted average CS ratio. So you have to find out the total contribution and the total sales and the total profit. So this is going to take a lot of time. So we'll take these information, right? We'll take these information and we'll try to work it out. So we have to get the units or else we can't multiply the numbers. So what is the total number of gym users who are coming in? Okay, that we have to find out. So to find out that we have to do it separate. So we have already worked out some numbers. Okay, there are some numbers here. So we will use those numbers and we'll try to find it out. So if you see, they say that there are 200 users at one time. It also has 100 facility, and they say that number of customers, everyone. See, it has determined that the average number of customers per day is 330. Okay, how can a facility of 200 can accommodate 300 is, see, it's a hours. Okay, throughout the day they are open, so people can come in at various times. So 330 people are the ones who are using the gym. But are the same number of people using the cafe? Let's see. See, on an average, half of the customers only use this cafe. So it is going to be 330 like this. So only 165 people are going to use. So for that, we'll get the number. So we can directly go to contribution per unit into 330. So 48,000. Okay, so 330 customers are per day. So how many customers are coming in a month? So we have to see how many days it is open. It is open for 30 days. So we can't take 330. We have to take 30 into 330. So these are the total number of customers. So it would be 9,900 into this. So this is the total number of contribution. This is a fixed cost and this is the profit. So we got the profit for gym. Let's get for cafe. So again in cafe also it is 30 into okay. So let's find out the cafe's profit. So this is the total number of customers and this would be the contribution for the customers and this is the total cost and this is the profit. Okay, so we have to get the total profit for both the cafe and the gym. So that will be cafe and the gym, and we also have to get the, because this is our formula here. Okay, we also have to get total weighted average contribution and sales. Okay, so we have to get total contribution and total sales. So total contribution will be this contribution and this, and total sales will be this plus, okay, I think we have not done total sales. We'll just multiply that. This is total sales and this is the total sales for so total sales of gym plus total sales of cafe. So we got this. So we can easily work out weighted average CS ratio now. So it will be 84862 divided by 101970. This should be in terms of into 100. We don't need to put 100. Okay, it comes to 0.83. So that is the contribution per unit. So let's find out the answer. We need the next formula. The next formula is these two formulas we have to apply. We'll get the answer. So MOS sales would be, I think we didn't copy the formula. So profit would be the total profit. So total profit is this number divided by weighted average contribution sales ratio. So our MOS sales will be this number, right? And as a profit, as a percentage, it will be MOS sales divided by total sales into 100. So this number should come below 100%. And this is 39%. Okay, so 39% of the sales is the profitable sales. Okay, so that's about MOS ratio. So we'll move on to the next ratio. So what does our calculation indicate? Okay, what's the explanation for our calculation? We have done a lot. So what's the explanation? The explanation is that we will break even. So we worked out break even? Yes. So we'll break even in 6,000 customers. So totally we have around 9,900 customers, and in 6,000 customers will break even. And again for cafe has around 4,950 customers, but we'll break even in 3,146 customers. Okay, so that's about what break even tells. So we should not have customers less than that. And the next part of it is MOS sales. So okay, so MOS sales tells us like what is the profitable part of the sales. The profitable part of the sales is around 40%. Okay, so the 60% of the sales goes to recover the cost. More than that, okay, the other 40% helps us to recover the profit. Okay, so that's about the concept here. So the next one is C. they're asking what is the budgeted total weighted average contribution sales ratio. I think that is what we found out that total weighted, I think that we have found out. Okay, we have already found out that. See, this is what it is. We have found out for this part of the answer, we have found it already. CS ratio, we have found that. And the budgeted profit per month for nuts if it closes the cafe and opens the creech. Okay, so what would be the profit if the company is going to close the cafe and open a creech? Okay, so that's another kind of a question. So what we'll do is we'll do this in a lower part, because there's already too much of questions here. So we'll start. So here they have the creech proposal. After reviewing all the above information, the manager of Nuts has put together a proposal to close the cafe at the fitness and convert it into a creech. So they're going to open a creech. This would mean that the parents could live in the creech while they use the fitness center between the hours 9 and 5. Okay, between that time only they are going to use. So what was the question? The question was, we have to find out budgeted profit per month. Okay, that is what we have to find out. So this is our consideration now. So to do this, we will have to have some information. I think we'll copy it from above. So what they say is, customers will leave their child at the time 9 to 5 only. The charge for the creche would be 4 per child per hour, right? Initial research suggests that the customers have an average of 2 children. The creche is expected to attract new customers and increase the average number of customers between 9 a.m. and 5 p.m. by 300%. Okay, so within that range alone, they are going to increase. Only these new customers will use the creche. And see, so it's not the existing customers will use it. Okay, only the new customers, I think they will use it. Car park usage is expected to be 80%. Okay, so there is going to be increased customers and they will also pay a car parking now. The fixed costs associated with running the creche are estimated to be 8,000 per month. So what we'll do is we'll first find out what's a profit from creche. That we'll find out. Then we'll find out, okay, profit lost from closing cafe. Okay, so we'll work out two parts and then we'll think about it, how to go further. So to work out this, we need a lot of information, and that information comes from these two areas. Okay, so from here we have to get it. So first we'll try to find out what's the increased. Okay, so what's the increased customers? If you see, they say that 40% of the customers, okay, 40% of this 330 customers are going to use the Creech. Okay, so exist already there is, it is 40. So 40 people are the existing customers, existing customers 9 to 5. So how many of them? There are 40, and this number will increase. Okay, increased customers would be 3 times this. So 40 into 300%. So 120 new customers are going to come. But he says that it is only this new customers, okay, and increase the average number of customers by 300%. Only these new customers will use the Creech. So the existing 40 will not use it. This additional 120 are the ones who are going to use it. Okay, so we need some more information. So each of them will bring one child. Each of them will bring 2 child. Okay, so we'll put it as children are per customer. Okay, so there are each customer, we could take it here. Okay, so each customer has 2 children, and they will leave it for 1 hour. So 2 hours of time, 2 hours of time will be there. So again, and per hour, okay, per hour rate is $4. So income from Creech, or we can put sales. Okay, sales from Creech would be this. That is, there are 120 customers, and all of them are going to leave. Okay, 2 of the child for 1 hour. That is like, okay, that is like 2 hours then, and then they are going to leave them at a rate of 4. Okay, so totally 960 is what is the income that's going to come from the Creech. Okay, and this is actually for 1 day. Okay, we have to do it for 1 month. Okay, we'll do it for 1 month, and so sales income from Creech per month will be 960 into 30. Okay, so this would be the income here, and there is also an additional income here. The additional income is car park. So these people, these additional customers, will use the car park. So how many of them are there? So 120 customers are there per day, and there will be 30 days, and 80% of them are there. 80% of them will use the car park, and car park amount is $1. I think that is what we saw here. So this is the $1. So $1. So this will give us the car park income. Okay, so total income would be Okay, so we got the total income. So let's get the expenses. So if you see, there is an expenses here which are given. So expenses, it is 0.5 per child and 8,000 of fixed cost. Okay, so variable cost is going to be 0.5 per child. So how many children will be there? There will be 120 customers, and each customer will bring 2 children, and this would be the okay, this will be for 1 day. So and for 30 days it would be this. Okay, so this would be the variable cost. So let's get the fixed cost. Fixed cost would be 8,000 per month. Okay, so I'll repeat it. It's 0.5 per child, and 120 customers are the increased here, and each of them will bring two children, and totally 30 days are there. Okay, so this is the total cost here, and we'll get the total profit from Creech. So it would be 20,800. And what's the profit lost from closing cafe? So the profit that we are losing from cafe would be, I think it's not, we have not got it here. We'll get it from the top. So the cafe profit is this number, right? The cafe profit is this number. It is 2062. It is 2062. We'll also get the additional contribution from gym. So we can see that the total number of customers here is 120. So that's going to be 120 new users for a month, and each of them will give a contribution. So how much is the contribution? So we'll get the contribution per unit for gym users. So it would be 8.4 is the gym entry. Car parking, I think we have taken. So 8.4 minus 1.2 would be the contribution per unit. So let's get that. 8.4 is the gym entry, and 1.2 would be the amount. So this is the increased contribution. So this is the increased contribution. So let's get the total. So because of operating the Creech, will get this, and additionally when they come to gym, we will get this, and because of closing cafe, we lose this. Okay, so this should be the relevant profit. So this is a relevant profit. So we can give a suggestion. The suggestion would be as profit increases from, or not from, we can put by 43, 93, 8, it is close cafe and open reach. Okay, so that is our suggestion. Hope you guys got a good understanding about this sum. This is what happens in reality also, because we might sometimes add another kind of an extra facility, or we might close a facility, or we might have to shut down our company for a temporary period. So there are like so many reasons why we have to find out marginal costing. Okay, so marginal costing has a wide range of application. So hope you guys got a good idea from here, and we will move on to the next problem.